This figure shows the main uses of overhead orders in Overhead Cost Management Accounting, or COOM. In the first case, you post costs for the two trade fairs directly to the cost center responsible for supporting these events. Because external costs and internal activities are handled with the same cost elements in the same cost center, you cannot easily determine which event created which costs. Therefore, you cannot carry out further comparison analyses of the two trade fair events. If each event is assigned its own overhead cost order, as in the second case, the costs can be collected separately. The settlement function allocates the order costs to the cost center responsible for supporting the trade fairs to provide you with an organizational view of the costs. This approach allows you to analyze and compare the results for the trade fairs even after settlement to the cost center. A further advantage of using overhead cost orders is the wide variety of planning and budgeting functions offered for orders.
Orders can be used as internal cost objects. The order can be settled in different ways, depending on what kind of jobs it is used to monitor. If a job is for a single product, you could settle the costs directly to the cost center responsible. The next step is to allocate the costs from the cost center to profitability analysis, or COPA. If the job is generic and concerns the whole company, it would be difficult to find the appropriate cost center to debit. In such a situation, it is appropriate to settle directly to COPA.
You can use overhead cost orders to conduct detailed controlling for a particular object or activity. All costs concerning this object or activity are assigned to the relevant order. When you create an overhead order master record, you choose whether to create it as a real order or a statistical order. You use the real order to collect costs and allocate them later to different recipients. In the primary cost posting, the costs are updated to the real order. In periodic order settlement, you allocate the actual costs to controlling objects. You can settle portions of the order costs to many objects. When you create a real order, you must assign the order to a company code. If you use business area balance sheets in financial accounting, you must also assign the order to a business area. You use the statistical order to evaluate costs that cannot be itemized in detail in cost element or cost center accounting. You carry out this evaluation by assigning the costs to both the statistical order and the cost center. You immediately see the costs in the order, that is, statistical for information purposes only, and the cost center, that is, real costs. The cost center to which the costs are to be posted can be stored in the order master data. The system then derives the cost center automatically. If the cost center is not defined in the order master data, you must specify the cost center as well as the order to be able to post the document. You can also assign the statistical order to a company code and a business area. If you make these assignments, you can only post transactions to controlling objects, such as cost centers that belong to the same company code and business area. For cross-company code or cross-business area controlling, do not assign a company code or business area in the statistical order. You can neither settle statistical orders nor apply overhead to them.
Internal orders in the SAP ERP application describe individual jobs within a controlling area. Orders support action-oriented planning, monitoring, and allocation of costs. Internal orders may be used for the following purposes: to monitor internal actions settled to cost centers, that is, overhead cost orders; to monitor internal actions settled to fixed assets, that is, investment orders; to offset postings of accrued costs calculated in management accounting, that is, accrual orders; to display cost accounting sections of sales orders in sales order management and include revenues that are not part of the company's core business, that is, orders with revenues. In the construction phase, you post all transactions to the order. During periodic settlement, all debits that do not have to be capitalized are settled to a management accounting receiver, such as a cost center. All items that require capitalization are settled directly to the asset under construction. The monthly valuation balances show the capital investment undertaking in the asset inventory. Full settlement takes place when the capital investment project is completed. You enter the final assets that the asset under construction will be settled to in the order settlement rules. The debits settled to the asset under construction are reposted to the final assets and the asset under construction is automatically credited. The settlement for this particular order type can be done by line item in addition to the standard settlement methods for internal orders.
Internal orders can be used as collectors of monthly credits resulting from the accrual calculation. Organizational expenses are often allocated differently in financial accounting or FI than in management accounting. For example, an expense entered in FI in one accounting period may cover a whole year from a management accounting point of view. To avoid cost fluctuations in cost center accounting, costs that do not occur periodically should be allocated to the relevant time periods and cost centers. Any costs allocated on this basis are known as accrued costs. This even distribution of an irregular expense is termed accrued cost.
In the target is equal to actual method, you can also use an internal order for collecting the credits. Accrual calculation requires order category 02, accrual calculation order. In this case, the distribution of costs, 2 periods, is based on plan values entered on the internal order. If you're not using the sales and distribution component, you can use internal orders with revenues to display the cost accounting sections for sales orders in sales order management. You can also use them to monitor costs and revenues for activities that are not part of your company's core business. Using the revenue postings allowed checkbox, the order type, you specify where the revenues can be posted to an order. Orders with revenues are settled at the end of the period in the following ways. Costs can be settled to any valid receiver, like all other order types. Revenues can be settled to the following objects: profitability segments, other orders with revenues, GL accounts, WBS elements with revenues, sales orders,